Well, hello everyone, I'm Dr. Stock, and in this video we are talking PCE. What we're going to look at is what history can tell us about the PCE, what the CPI that we had back on February the 14th, Valentine's Day, can tell us about what to expect for January's PCE. So we're going to combine those two things, take a look at what consensus is, and see about where we're going to land. I think we have a fairly good idea of where that's going to be based off history and based off past performance that we've had with the CPI and PCE's relationship to it. So with that said, if you want to hear more of my commentary, check out the link for the Patreon down in the description. Click on that link, sign up, check out my Patreon exclusives, and be part of the community that we have over there. We're growing quickly, and we'd absolutely love to have you. All right, I'm going to try and keep this neat and clean for you. What we're looking at here on the screen in yellow, these are the usual values that we have for the PCE. And in blue is the average value that we have. Consensus is coming in just above the average at 0.4, which happens 11% of the time. The last print that we got was 0.1. That was for December 2022's PCE. And you can see that happens about 19% of the time. And this dates back all the way to, I believe, 1959 when we look at these values. So that last print was kind of low, but if you remember CPI for January, it came in kind of high. I believe 0.5 for all items. So to come in 0.4 for this actually isn't so bad. We'll look at those comparisons between CPI and PCE soon. They are different measures. They don't always match up, but they do move somewhat together. And so we can use that to get a better idea of where we think PCE is going to come in at 8:30 Friday morning. I do want to take just a quick moment to note that these numbers that we're looking at here, these are since the pandemic. So this is only March 2020 forward. And you can see the average is now 0.4, which is also a consensus is. And I have the last value mark, which only happens 9% of the time since the pandemic happened in March of 2020 onward from there. So with the volatility that we've experienced more recently, we do have a slightly higher average. That's something to pay attention to. Let's take a look at what that looks like year over year. So what I have for you in purple, these are the values that I expect that we could possibly see. Red is in consensus. Red is the consensus that we have, and where I'm getting that from, and I'll show you the chart for it, is PCE compared to CPI. When you compare all items When you compare all items for CPI to PCE, what you get is that they typically fall for month-over-month values within 0.1 to 0.2% of each other. So CPI coming in at 0.5 within 2% of that, and typically we're usually lower with the PCE than the CPI. So I think 0.5 reasonable. It could happen that we match up. 0.4% for consensus I think is more likely, and then 0.3 falling just after that. So if we get 0.5% month over month, that comes out to a year over year value of 5%. I think what would be better for markets is if we met consensus and actually got to see the fours pop up out of that. Even better than that would be beating consensus and coming at 0.3. 0.3 I think is upward pressure for markets. 0.4 is confirmation that what we're seeing is sustained inflation and that it gives more reason for the Fed to possibly tighten further. And well, we don't want that for markets. I think consensus would be a little bit of downward pressure, and I think 0.5% would certainly be downward pressure on the markets from the PCE. Now for the core PCE values, again, blue is the average, and that was also our last at 0.3%, and 0.4% is what's expected for consensus. So we'll see if we come in at those values as well. And I also have the values since the pandemic for that. So 0.3% still since the pandemic, and the 0.4% for consensus. You can see that that happened about a quarter of the time that came at 0.3, and you can also see that about 1/5 of the time, 1 out of every 5 times, we come in at 0.4%. So not all that unusual to see it come in at those values. Now, what does that look like when we come over here and look at the expectations for January? Well, for December, we had 4.4. If we come in at 0.5, which could happen, I don't expect it. And like I said, I will show you that comparison between CPI and PCE in a moment. And this is for core. This is less food and energy. So with that volatility subtracted out, if we come in at 0.5, we still have 4.4% year over year. It could happen. Don't totally expect it to happen, but it's something to watch out for. 0.4% month over month would lead to 4.3% year over year, and 0.3% month over month would lead to 4.2% year over year. So in purple is what I expect that we could possibly see. And like I said, I still think that even though this is core, I still think that 0.4 and 0.5 are downward pressure on the markets. Certainly 0.5 would be a lot of downward pressure on the markets. 0.3% I think is where we actually start to see some relief in the markets and some upward pressure. So those are what I think is going to happen with the markets according to what we see with the PCE here. Now, I said that I would show you the charts comparing CPI to PCE for their month-over-month values. So looking at this chart, the blue is CPI, the red is PCE, and this is not core. This is for all items for CPI and the PCE, just the regular chain type price index for PCE. And you can see how well that they move together over time, but it's not a perfect match. And you can see oftentimes when we have some peakiness, some spikes upward for CPI, that we don't quite get there with PCE. So CPI that came out on February the 14th came in at 0.5%. So I still think that we could be within 0.1 to 0.2% of that. So I think it's highly possible that we fall just that 0.1% shy. So instead of hitting 0.5% like we did in the CPI for month over month for all items, for PCE, I think that we hit 0.4%. That is my prediction based off history and based off the relationship that we have between CPI and PCE. We'll see if I'm right. You guys can let me know. Now, when we look at core, again, you can see the two of them mostly moving together. Again, red doesn't peak up nearly as much as blue. Blue is still CPI. Core CPI, red is core PCE. They're both less food and energy, and red doesn't seem to move as much. CPI seems to like to sustain a little bit higher, and red seems to be a little bit more subdued as we get towards these higher values most times. So with that said, we came in for CPI in January as 0.4. We could possibly still reach that at 0.4. It's possible that we fall 0.1 beneath that and end up at 0.3. I don't think that we come down as low as 0.2. It could totally happen, but given the higher reads that we got in the CPI recently, I don't see PCE moving down to 0.2. So 0.4 and 0.3 are my two most likely. And when we look at consensus, it actually comes in, according to one of the Federal Reserves, that it comes in at like 3.5. It is like right smack dead in the middle of 0.3 and 0.4. And so for me, like, I think it's the same coin flip that I was talking about with the Nvidia stock when it came to their earnings. I felt like it was a coin flip. I didn't know which way I wanted to go on it, so I didn't choose. I just stayed out of it. For this one, I don't know. I don't know where I want to. I still at this point don't know where I want to hang my hat. I think 0.4 feels right, but no real significant evidence that makes me lean towards 0.4 versus 0.3. Not only do we have PCE coming out, but we also have consumer sentiment, the final version of that, after the preliminary estimate that we got probably 2 weeks ago. That comes out at 10 a.m., not 8:30 like personal income and outlays does, that has the PCE on it. So that can also be a market catalyst, but being that we generally know about what it says, I don't expect that to change too much. So one last thing I'd like to do is I'd like to take a look at the markets and talk about their price action and what I expect to happen in the markets tomorrow when the PCE is released. So let me move over to the charts. So here we're looking at the SPY, which tracks the S&P, and pretty much it closed. The S&P closed right around 4,000. The SPY, take about a tenth of 4,000. It's 400, and that's about where you find the SPY. It's not really all that surprising that it ended there. Basically, a key level of resistance, a key level of support, and really the market is just prepared to go either way based on the news that we get tomorrow from personal income and outlays. And that includes, like I said, PCE is the big one. Which way is inflation going to go for us? That's the big question in the markets. And with that uncertainty, we sit right at a key level, like I said, of support or resistance. So let's zoom in a little bit. You can see that we're trading below it. Today, we opened above it and closed pretty much at it. So it's still a green day because we closed above the previous close. So the SPY was up about 0.5% for today for the close. What does the PCE mean in terms of price action? Well, you can see we actually came down. We tagged the 50-day, bounced off of support right on that 50-day simple moving average that I have on the chart here. And that was at about 396. So that could be about 1% down from where we're at. Honestly, it depends on what sort of print that we get. If we come in at consensus at 0.4%, I think that we drop down at least that 1%. But honestly, I think we have room down below that to come down to the 200-day simple moving average, possibly giving up 2%. So we're going to have to watch and see if it comes to that 0.4. If it unexpectedly comes in at 0.5, for some reason it comes in, and we'll talk core PCE. Core PCE comes in at 0.5. oh my gosh, like I think that that would be a fairly dramatic day in the markets. I think we'd see more than a 2% move downward in the S&P. So that's enough talking about the down for right now. Let's talk about up. So if we do move up, we actually have some areas where we've stalled out before, and we actually have room. We got room for about 2% up from where it's at, and that would be 0.3% could land us there, honestly. It really depends. 0.3% would be a decent move. The Fed prefers the PCE for their inflation measure. I think 2% is about right. If for some reason we got 0.2% month over month for core PCE, which I don't expect, 0.2% I think would be incredible and move us up possibly that 3 to 4% that we could have in the S&P. I think it's more likely the case that we have 2% in either direction. I think that that is pretty much our home for the S&P. When 8:30 hits, by the time we close the market for Friday, by the time we close the market out for the week, I think we're 2% up or down, or I should say within 2% up or down from the close today, right at 4,000 in the S&P, 400 on the SPY. So 392 up to 408, that's the range that I would put the closing price in for the SPY, and we're going to have to see. Because I think it's going to be 0.4 for core, actually for both of them, I think it's going to be 0.4. I think we're coming right at consensus. Honestly, I think that we end up closing down about 1%, maybe 1.5% in the S&P. All right, so let's take a quick look at the Qs. And on the Qs, I think 294 is about right from what we see here. In the NASDAQ, that number is 11.6. It's support, it's resistance, it's like right there, just like the S&P was with 4,000 being that level. The market is just waiting to find out what direction it should go, what direction it should take us. And I think a lot of it hinges on the PCE. I can't say that everything hinges on it, but I think it's a very big thing as we're looking to see more information about inflation, to see if the Fed is going to stay where they're at with their tightening cycle, or if we have a little bit of surprise to the downside with those month-over-month values that allows us to take a deep breath of relief and have some levity in the markets, or is it something where we're going to have further concern and we surprise to the upside? So, like I said, consensus, I think it's a little bit of downward pressure. Maybe it lands us as far as the 200-day moving average that we have today, right at about 290, we'll call it. And so that's about 2% down from where we're at. Moving up from there, we have this area where we seem to stall out right at about 305-ish. So that would be about 3% to the upside. And I think it would take a darn good surprise to get there. I don't know that 0.3% would take us that high, but if we see 2% up in the S&P, then seeing 3% in the NASDAQ isn't really all that unreasonable or out of the question. I think making it up above these values, that would have to take a significantly good print in the PCE that I just don't expect to see. If I had to assign a color, red or green, to this week's market, it would be red, only because I think that we're going to come in at consensus, and I think it's going to be confirmatory to the Fed's story. That's why I believe the way that I do. Now, in March, when the CPI comes out for February, so that's March 14th, I have that data. It's available as one of my Patreon exclusives. You can go over and check it out. That might tell us a bit of a different story. So we're going to have to see what February has to tell us. Maybe it has some good news to tell us, and maybe we see some additional levity in the markets in March leading up to the next FOMC meeting and the summary of economic projections that come out along with it. And that's all prior to the Q1 earnings. And I think then after that, that's when we start to get a little bit more concerned. For right now, as I've mentioned in previous videos, I think having some healthy retracement in the markets is a good thing, especially if we want to see any sort of continued bull run. Because when we see too much of a run up, the more it's run up, the more likely it is that we come crashing back down in a hard way. And I gotta say, it's been a pretty gentle downward movement so far since our most previous peak. And those are the kinds that I think are handled pretty well, that we actually get time to look, to plan, to make decisions. And that's the sort of an environment that I prefer to be in, rather than ones where, we're just whipping up and down all the time. That volatility can be hard on the heart after a while. So I better let you guys go. Thank you for listening to this video. I really appreciate it. If you'd like to hear more of my commentary, please check out the link for the Patreon down in the description. Click the link, sign up, check out my Patreon exclusives, be a member of the community. We'd absolutely love to have you. Now for some free stuff, click the like button if you like this video, hit the subscribe button if you haven't subscribed already, and ring that notification bell to see any time that my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.